Good Thursday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with our co-hosts. Around the horn we shall go. Mr. Dwight Millard, how are you today, sir?
I'm doing fantastic, John. How are you?
Very well, thank you.
Good.
Little beaten up from today, but we're all good. We're all good.
I know you are. You know, we've always talked about for years, what goes up must come down and what goes down must go up.
Hey, we don't like that negative talk.
No,
we don't
but
like
I'm just saying, you'll be okay. You'll be okay. You'll finish out here's the good news. You'll finish out the year up, right? It's just all the beating along
God
the
willing,
way.
Dwight. God willing, we will finish the year up. That's all I can say. God willing, we will.
Yeah.
Mr. Aaron Clark, hopefully we have you, my friend, from Edge Realty. Nope, we don't have him. We've got a little audio problem with him, so I apologize. He'll get it figured out. He's the tech wizard, but he'll be joining us here momentarily. At least I hope he joins us because the show's really about him, Dwight. We're really going to be in a world of hurt if you and I have to figure all this out.
Maybe we start with how to hook
technology
up
killing the real estate deal.
You and I are here. That's the miracle, right?
No kidding. Kidding. Yes, weather still continues to wreak havoc on things. My internet went down for hours today, and I just one thing after the other.
Yeah.
But it's all good. It's all good. It's favorite hour of the day here. Here we go. All right, folks, let me tell you what we have lined up for you today. We're going to be flipping the script on technology and real estate. We're actually going to do almost an opposite show from what we did on Tuesday with Aaron. And on Tuesday, we talked about how AI and technology is dramatically enhancing the real estate market from the real estate agent standpoint, which inevitably helps you, the buyer or the seller, right? You're so well informed these days compared to years past. But we're going to reverse this a little bit today. Everyone says AI and automation, they're making the deals easier. But what if they're actually not making the deals easier? What if they're actually killing the deal? That's right, killing the deal. So we're going to go over from bad online valuations, overconfident, cocky buyers, and to Dwight's world, the automated pre-approvals that sometimes just fall apart. You take a man of his 40 plus years experience, he looks at it and goes, "What do you mean this thing turned it down? The automated underwriting turned it down. What do you mean? No.
Yeah.
And that's why, again, as we discuss these shows, whether it's on Mondays with my brother, Dr. Dennis Sanchez, or with Aaron and Dwight, we can't emphasize this enough, folks. Technology and humans, that is the perfect equation. It's not one or the other. But if you, again, find yourself in a situation where your real estate agent says, technology or AI said this is what your house is worth, you better run the other direction. Right, Aaron Clark?
Absolutely.
Yeah. It's how often are you seeing that before we get into the topic of when tech kills the deals? How often are you seeing that?
I think that a lot of the situation now is with the immaturity of the use of a lot of the technology, where people are
I like that term.
Adopting it without understanding it or figuring out how to utilize it, and they're relying upon it completely. I mean, I see that a lot with just outside of even real estate, where people are using AI to justify their whatever, and they're just taking it as gospel instead of actually understanding that it's still, I mean, it's a newborn baby. It's crawling right now.
Yeah, it is. That's
In
right.
10 years from now, we'll be blown away at the difference of it. So
Yes,
I think you still have to be careful that you're double checking it. It even has a disclaimer on most of the AIs that say
AI makes
don't
mistakes.
take this as actual fact and make sure you double check things. And you're seeing that a lot now, where you're seeing news media, et cetera, getting a little bit of egg on their face because sometimes they'll use AI to justify something and then realize later, oops, that wasn't exactly accurate, you know?
And what we're learning, right, Aaron, is there is no liability, right?
No.
If AI says this, and this, and you and your profession utilize that information, you are the one that is ultimately responsible.
Absolutely.
This is, I don't know about your guys' industry, but in the world of investments and portfolio management, et cetera, this is one of the hottest area among regulators, right? Because everyone in our industry, like in your guys' industry, everyone's using AI in some form or fashion. It's obvious. We're not going to spend the time going through all the major benefits, but the minute that you rely upon it and say, I'll use an example like in our industry. If Aaron, you come to me and go, John, okay, here's $100,000. I want you to put it in the market, build me one of your great portfolios, and everything's going to be wonderful. And I type it into Chat GPT. Okay, I've got a young man that's 46 years old and he's got kids and he's married and he's got a great career, blah, 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 blah. And his risk tolerance is aggressive and he's not going to retire for another 15 years, and give it all these facts. Spit me out a portfolio. I can do that in a heartbeat. But guess what? The minute I do that and I don't put my 36 years of experience into it and say, no, wait a minute here, that allocation is not right or whatever the case is, I'm in trouble with the regulators, right? And this is one thing that we are watching very closely in our industry is it's so easy to rely upon the computer. But once again, as I keep emphasizing, I know you guys agree, it's the human being plus the technology. That's where we are today. And who knows if that's going to change. I hope everything that I'm seeing and researching, that will remain the same for many, many years to come. What about you, Dwight?
Yeah, John, the same thing. It's interesting because the buyers have just enough information to be dangerous, right? I mean,
Yes.
I
Yes.
I
We're not
mentioned the other day.
criticizing the buyers, right?
No,
We're
no,
all in the
not
same
at
boat.
all. Because we all can gather information, but that's where the expertise. Not everything is black and white like that. But
Yes.
it's interesting because I had a gentleman call me the other day, and we were going through strategic programs and pricing. He goes, "What's your low level price adjusters?" I brought this up a couple weeks ago. What do you mean? I mean, way too much, right? Or you're listening to the show way too, but I'm just saying, and so it starts to distract from some of the noise. So, but I'm with you. I don't use chat very much, occasionally, but I just like to use my own wisdom, my mind, and all these years of experience trying to figure it
Yep.
out. Because a lot of people aren't anymore, right, John? I mean, Aaron said
Oh,
last
sure.
week, there's a lot of agents that just rely upon it, and we're getting sloppy, we're getting lazy, and that's just not me. I still handwrite my good faith estimates, I call them, because it keeps my brain going, But anyhow, but you're right. The world's changing for sure.
Yep.
Right in front of us.
I want to deviate just one quick second before I get to the stock market side, and then we'll get into our topic when tech kills the real estate deal. And what I wanted to share is a phenomenal YouTube video I watched last night. And Aaron, I'm sure you're probably familiar with Claudebot.
Mm-hmm. Yeah,
Okay.
it's amazing.
It is absolutely amazing. And this young man, I don't know, he probably looked like late 20s or something, says he's going to build $1 billion company just using bots. Okay. So I won't obviously go through the video. There's tons of them on there or out there. But what blew me away with this whole thing was he showed on his computer screen how these Claude bots are working for him 24 hours a day, 7 days a week. So Dwight, I was thinking of you because I'm going to blow you away when I tell you this real quick. Shows on his screen these look like almost like little cartoon characters, right? They're all different color, almost like little Pac-Man in a sense. Well, his chief of staff bot, he calls him Henry. I call mine Hermano. He calls his Henry. Okay. Henry is his chief of staff. Below Henry is about 6 other bots. But each one of these bots, Dwight, have a specific responsibility. One does nothing but crawl the internet for AI related stories. Another one crawls social media to find everything and says, hey, you need to post this type of short. This is the trend in AI. Post this type of short. It tells them everything on the marketing side. You get my point? Every one of these bots are like having an employee in a marketing department, in a compliance department, whatever department that makes up your business, there's a bot doing that. And he says, I've got these things running 24 hours a day, 7 days a week. They never ask for a day off. They never ask for a raise, nothing. And then he shows this conference room table. It's kind of like a top-down view, this conference room table of all of these little bots. Again, they look like little Pac-Man, all different colors, sitting around this conference room table. And he's in there, he's talking about something else. He goes, look it, they just got up and they all walked to the water cooler. And they still continue to talk. And so what they do, they come up with their ideas. Then they have to take it to Henry, the chief of staff bot. And he either says, yes, go ahead and do this, social media bot, or no, don't do this. And then it gives this host of this video, his company, it gives him a report, what Henry is doing, what Henry's has approved or disapproved. Mind blowing, right, Aaron? I mean, you're sitting there shaking your head, Aaron. You're just going, yep. But that's where it's going, Dwight, where, I know you pride yourself on the old fashioned way, but let me tell you, we all have to, and I encourage all of you to do this. Spend some time, whatever website, I find YouTube, you can just find anything on there about, technology and how it's changing our lives, and just watch one of these, what some of these guys that are really nailed into technology, what they're doing. It's mind blowing. The one that got me the most when I first started watching it when I was eating dinner last night was, there's a video that started going around the internet yesterday of these Chinese robots. Did you guys see this? Doing a dance show. You know how they have these big dance shows in China?
Yeah, like on the streets.
Well, yeah, but this was on a massive stage. I mean, it was a beautiful, beautiful stage. And they wanted to show what these robots are capable of doing, human bots, what they're capable of doing now compared to human beings. So they had, let's say, 6 human dancers and 6 robots. And guys, these robots were doing every move that the human beings, from the sword fights to, how like rappers, or street dancers will run up onto a wall and then they'll do a backflip. These robots were doing this. Dwight, these robots were doing flips in the air. That's how flexible these things are. And I was telling Dennis, my brother, about that today. He goes, yeah, just think.
Wow. They don't want to dance like me.
He said, just think. That's the next Chinese army. Right. That's where this technology is going, where those bots now, it's not the old days where they're, look like out of Terminator or something. These are things that are moving and flipping and doing it. It's crazy. It's crazy what's going on. So
yeah, and the more they make them look humanistic,
yes,
that's what's going to get even
yet.
freakier for me, Because like you said, they used to just be so robotic, right? Now they're not. They're
absolutely. Else. Before we run to break, I've got a favor to ask everybody. Speaking of YouTube, I've spent a lot of money and a lot of time changing the way that we deliver this show to you, right? Or of course, our favorite place is right here on News Talk 70. Then we evolved into getting a podcast out, which I know so many of you listen to on Spotify and so on and so forth. And then we've gone one step further. We purchased software that allows us now to record the show, right? And literally our great program director or marketing director, Bailey Sanchez, literally 10, 15 minutes after this show is done, it's all edited. So it takes out all the stupid things that I say and the ums and the ahs and all that. And she has it up on YouTube and of course, all the podcast sites and on social media. There's shorts on YouTube. So with the software, the AI, to be honest with you, thinks that was an important thing that I said or Aaron said or Dwight said. And so the reason I'm telling you all this is I have a favor to ask of all of you. There's very few of you, to be honest, that are watching this on YouTube or following up. Please, go to YouTube. Tell your friends about it. We've got to get a couple thousand subscribers going on this thing, or I'm going to stop it, to be honest with you, because it costs me a lot of money. And I'm doing it for you. I don't need to feed my ego and say, oh my God, I got a YouTube channel. I don't care about that. I'm doing it for you because I was just looking right before the show, and you can see, if you jump on YouTube right now and type in the Jon Sanchez Show, you can see we've got, I think 43 episodes that we have accumulated on there. But there's going to be a lot of educational stuff. So get on there, subscribe to the Jon Sanchez Show, give the thumbs up, as they always say, and so on and so forth. And we're going to continue to build a lot of content. What we haven't been able to do yet, just time-wise, and we're going to, a lot of educational things. I want to sit down and I want to do a one-on-one with Dwight and really get into some things. I want to do the same thing with Aaron and with Corey and so on and so forth. So get in on the ground floor of the Jon Sanchez YouTube channel. Get on there, subscribe. Let's get these subscriptions up to, a couple thousand on there. We really would appreciate it, right? We're doing it for you. So please repatronize back to us. All right, let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard and, of course, Aaron Clark of Edge Realty. All right, let's get down to what we're going to be talking about here. Once again, when tech kills the deal, we're going to go to the opposite side of what we've been talking about, how tech has enhanced the real estate market. Like everything, there's two sides to the story. We're going to give you the downside to it. It's going to be real fascinating. Don't miss it. As far as the market, we've lost 268 on the Dow today, a 0.5% loss. Finished at 48,395. NASDAQ gave up 71, S&P lower by 19, about a 0.28%. Small gain on the Russell, almost 0.25%, 0.24%. But what really happened today? Not much of anything. Once again, yesterday we had a decent session. We saw a good rotation into software, some of the areas that have been beaten up. Today, it was basically the private equity type of companies, and compliance will chew my butt if I mention the one company that caused this, but it caused significant worries. This is a private equity company, excuse me. There was a story reported in the Financial Times that this private equity company halted redemptions in their private retail debt fund. The company came out and refuted that, but the damage was done. This particular company at the heart of this story lost almost 6%, but it hit some of the other big names, some of the competitors. Apollo Global Management down $7.02, about a 5.6% loss to 118.34. Blackstone, the world's biggest, $7.14 decline, down 5.37% to 125.76. So that was kind of how the day got started. Then we got some earnings numbers out of Carvana, which that stock was just a darling of Wall Street. Still pretty much is, but didn't have the best quarter. They got hit hard today. Almost an 8% loss, down $7.93. 28.67 was the loss, $28.67 to 332.86. Walmart, the big daddy, of course, of the retail sector, they reported early in the pre-market, finished down $1.75, 124.87. They had good earnings numbers for the last quarter, but yeah, the guidance is typical with Walmart, was below expectations. So that really was the highlight. There wasn't any major problems. Some of the big tech names did okay, and some of them didn't do so good. So, like I said, not a tremendous amount of things to really hit on. I want to hit on, Dwight and I were chatting off air about the economic data today, because this ties into the bond market side. So we had the initial claims for the week, your first time filing benefits, down 23,000 to a very low number of only 206,000 people. Continuing claims bumped up 17,000 to 1,869,000. Dwight, pose your question, because I think it's very valid. I want the audience to hear it so I can respond to it very quickly.
Well, we were talking off air. I said, the headline today was, initial claims, unemployment claims down, and then I asked you, I said, that should bode well for the market, but you're saying you're not trusting the data that's coming out on the employment things. And I agree with you that something's wrong, but
there is some disconnect. I haven't had time to research and give you factual data. I'm just going off of experience and kind of my gut feeling, but there's something strange going on. Aaron, how many hundreds of thousands, if not cresting a million jobs have been lost just in the last year or so to AI? Huge numbers.
Yeah.
Right? We see the layoffs, Amazon, and right on down the line. But somehow, some way, this initial jobless claims numbers, again, the state filing first-time benefit for state unemployment benefit, just never seems to move.
Yeah.
It stays between this 200 to about 220. How? There's a fascinating report I want all of you to research, and I may try to tomorrow's Friday already. I may try to cover this tomorrow. Goldman Sachs and I forget the other Wall Street firm came out and did their own research about this jobs market. And they said, look, something strange is kind of going on. Because of the immigration deportation, there are 80% fewer illegals working in this country now. 80%. So how can this number keep going down, meaning people are going back to work, if I don't know what the exact number is, I'll dig it up, but I'm going to assume hundreds of thousands of illegal immigrants that were counted as initial claims numbers and in the payroll numbers they're gone. And somehow we're still, our claims are going down. The whole thing doesn't make sense. When we had the non-farm payroll numbers last week, dropped from 4.4% unemployment down to 4.3%, it doesn't make sense. But anyways, there was a report that came out yesterday by the New York Federal Reserve. And what this report is it criticized the Trump administration in regards to the tariffs and who's paying the cost of this, right? The Trump administration has said, and I'm just going to go right down the neutral line here. We're all diehard Republicans. We're going to go down the neutral line here. The Federal Reserve report said, wait a minute here. 13% of the cost of tariffs are being paid by you and I as the consumer. That is massive, billions and billions of dollars. Kevin Hassett of the Trump administration came out and said the author of that report from the New York Federal Reserve basically should be punished and criticized. In his mind, basically, like the guy should be thrown in jail. That's how inaccurate Kevin Hassett thought this report was. But this goes back to the same thing. How is the consumer, or we know why the consumer is stretched, but the data is not showing it because it's costing us more and more to live each and every day. That's what the Federal Reserve report showed. But again, the Trump administration went, no, that report is 100% wrong. Corporations and all the foreign companies, they're absorbing the tariff costs. Well, that's not what the New York Federal Reserve said. So my whole point of this is there's something strange going on with the numbers, in my opinion. And I think both of you are shaking your head. Yes, I think both of you agree. We'll leave it at that. It's a whole topic for a whole nother day. But I guess my advice is take with a grain of salt what's going on with the economic data, because a lot of it just is not adding up. Like I use the analogy, 1 + 1, in my opinion, is not equaling 2. We have no way to prove it. It just feels that way. It just does not make sense. So anyways, we'll go, like I said, we'll go off of that. All right, when we come back, let's turn tech and real estate upside down. How tech is hurting or can hurt the real estate deal. Great data we got from Aaron and Dwight. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard and Aaron Clark of Agility. All right. Once again, we finished down 268 on the Dow. NASDAQ gave up 71 and the S&P lower by 19. When tech kills the deal, that's right. Tech can be a great benefit in the real estate world, whether it's from the agent standpoint or you as the consumer. The knowledge that you have now literally in your pocket, meaning your phone, it's incredible. But it's not always accurate, and it's not always a deal maker. And that's what we're going to kind of break that myth there. Dwight, I want to start with you. You talk probably at least once a week. It comes out of your mouth. The pre-approval process. That's tech related, right? Like you gave the example on Tuesday, they submit an application, the algorithm will go yes, no, or maybe. Go a little bit further when, and I love stories, guys. You know that, and the audience loves stories.
Yeah.
where Dwight is an example where the automated underwriting system, the technology said, nope, this client is turned down, and Dwight's like, no, it's not, and here's why, and you ended up getting a deal done. Something along those lines. Give us an example.
Yeah, so first off, John, your deal is only as good as the information in it, right? So when I run an
Garbage in, garbage out.
Yeah, when I run an automated approval, it's going off the information I give it. Now, what it doesn't know, John, is it doesn't know that you've only been on your job, 6 months. It doesn't know, that it does know if you're self-employed, but it can't know all the things. It only just knows the facts that you give it, income, assets, things like that. Where you start to see the problem, John, is as you go through the process, we're supposed to, in theory, rerun that automated underwriting engine every time something changes in the file that
Sure.
change assets, income, things like that. So I just had one recently that I actually bailed out for a builder, and that was the person was on their job, and they were basically, it wasn't that they were in training, but they called it a gap. The current lender, and it's a nurse, and so PA, and so they're not quite. They're hired, but they're background check, subject to background. So the system approved it all the way to the end, gets to the end, the underwriter says no. 11th hour, 59 minutes, just like you're saying. I picked it up, we just ran with it, and it was exactly what we thought it was, and we got it approved. But there's so many instances where that's what happens. And John, at the end, Fannie and Freddie and FHA all requires us to do credit refreshes. So don't go buy a car, don't miss a payment, because we have to do those little credit refreshes. And you can take a score that I've gotten you approved at for forever out of 720, and then all of a sudden you miss your, a student loan payment, and I'm at a, a 620. So that's how they.
So the bottom line,
out.
the system turned it down, but you went in and went, okay, wait a minute. There's more to this story. You ended up getting her approved.
You can still make the case, John. You can still have some variables.
There you go.
So yeah, and you've got
There's
to
a prime
work with
example.
companies that have that. Yeah. So.
Perfect. Okay, Mr. Clark, let's go over to you. Boy, I think your industry is one of the first that really started kind of quote using AI. Which how many years has it been now since we've had Zestimates, right? The Zillow. Remember that? Do you remember what year that even came out? It's been a while now.
It's been a while. Yeah.
Yeah, 10 plus years.
Well, longer than that. Probably.
Maybe
so almost
2015.
Okay, yeah, time
would
flies.
be my guess. Yeah.
So now you've got that, right? So buyers think, of course, hey, Aaron, you just did an analysis of my home that you're going to list for me, and you're coming back and saying it's worth $620,000. But Aaron, Zestimate is saying it's worth $780 or $790 or $800. I mean, I have heard stories from my clients, and I remember Corey years ago, and I don't know if this is still accurate, years ago said, take 10% off of what Zillow says your house is worth, and that's more accurate. Bring us up to date. Where are we now in that technology and how it can kill a
honestly, it goes kind of both ways because...
Does it?
Yeah, because, so algorithms estimate value, professionals interpret value, right? So these algorithms from Zestimates and, homes.com and all these different things, even now, when you look at them, a lot of these platforms, they'll actually post 5 different companies, kind of like a credit score, 5 different companies' evaluation of what the property is worth. Yeah, and when you look at them and look at like the trend lines of it and everything, the trend lines aren't even in the same planet. They are crossing back and forth like swords fighting, right? So
no kidding.
It just depends because different algorithms use different information. A lot of them focus more on, let's say, tax data or assessor data. Others focus more on like a radius. So, if you pull a radius search around, let's say, a property in Hidden Valley of a half a mile, you're going to get everything in that.
Right.
in that area. And so it'll
Right.
just do a price analysis based on everything within in that half a mile that's a 3-bedroom, 2-bath, if that's what you're comparing it to. So they're all over the place. The big thing is, they're good when you're trying to get a ballpark of, okay, 20 years ago I paid 300,000 for my house. What are they going for? It's saying it's worth about 650. Okay, you can get a ballpark. So if you need like an equity line or something like that, you have something to use there. But yeah, that's about.
Have you ever taken, and I'm not picking on Zillow, they're a phenomenal company, but Zillow, Trulio, any of the, similar type companies, have you ever taken their estimates and taken your data through MLS, et cetera, and dumped it into one of the large language models
Yeah,
and compared it?
I have.
What's the comparison
Well,
like?
it was pretty interesting because, again, if you're in a very saturated market that has multiple type of housing within a small area, so using the half a mile radius, for example, they're way off. So when you take that data and then you overlay it with MLS and then you put it in like an AI model and have it evaluate it, I mean, it just pokes holes everywhere into the Zestimate or Homes.com
No
evaluation
kidding.
or whatever.
No
But
kidding.
if you're in an area like, for example, let's say like Saddlehorn or Arrow Creek, that you have very similar housing and there's really nothing differential even within a half a mile radius of those, it's pretty accurate. It does give it some props into the evaluation of what it's doing. Really where it gets torn is on year built.
You mean an AI gets torn?
Yeah. So it'll look at when it's comparing to like Zestimates, because Zestimates and other algorithms, they don't really focus so much on whether or not a home was built in 1990 or 2009, whereas AI will take that more into account.
Which it
Because
should, right?
Yeah, it should. Yeah,
Yeah,
definitely. And
I don't understand
as
why-
a buyer, you're going to look at a property. You look at a property that's built in 2006. That means all of the heartbeat of the home, appliances, furnace, things like that.
Yeah.
They're 20 years old. They're all pretty
Right.
much at the last leg, unless they've been replaced. Versus something that's 5 years old.
So a gun to your head. A gun to your head. I'm so sorry, Dwight. I keep cutting you off. A gun to your head, Aaron Clark. If you just listed my house and I said, Aaron, you choose one, either Zillow or a similar type company, or you're tech savvy, go pick your favorite LLM, your large language model, and then come back to me. You can only do one or the other. Which one would it be?
So one evaluation only using one of those sites?
Yep. One of those sites or large language model.
I mean, if I had to, I would probably, because I think Zillow has the corner on data, I'd probably have to use Zillow if I had to, and I
Really?
couldn't interpret myself. Yes.
Over AI.
Yeah.
Wow. I'm surprised.
The reason I say that is because when somebody's looking at it overall, it's pretty easy to take that information and get an evaluation for anything that you're trying to understand. Now, if you were trying to be super precise and you had all of the details about the neighborhood and you could put it all into a large language model like AI,
Right.
then
That's
you're going to
exactly.
get a much
Dwight's
more
point,
accurate.
garbage in, garbage out.
Yeah,
Well, that's
but
my point. But that's
most
your job as
people
the real
don't
estate
have it.
agents to do that.
Yeah, as
Yeah,
a
but
realtor,
you do as the real estate.
Yes,
Yeah,
I
well,
would use
that's
AI.
my question.
100%.
Yeah.
Yeah.
Oh, see?
Yeah.
Okay.
Yeah.
Yep,
I
okay,
thought you
but
meant
John,
as the consumer. As the consumer?
No. If I
As a
hire
realtor,
you
yeah,
to...
AI, 100%.
Okay, now
Yeah.
I feel better. I'm like,
Yeah.
whoa, wait a minute here.
You're like,
I'm
what is
missing
he
something.
smoking over there?
Yeah, no
What's he-
kidding.
yeah,
What you smoking,
What's our
man?
little computer guru thinking?
Holy, yeah.
But John,
Real
so
quick.
here to Aaron's point, here's the problem. If this was that good, then we would get a lot of appraisal waivers in our
Yes.
system, in our
Yes.
and we're not getting them. I mean, Richard Lace will tell you we are not getting that was the next best thing that was coming down 10 or 15
Yes.
years ago was
Yes.
we're going to get appraisal waivers so we can make the file move along faster. And to your question, Zestimates came out 20 years ago this month. 20
Wow.
years ago,
God,
2000
time
and,
flies.
yeah, 2006,
Wow, time
February
flies.
of 06.
Wow.
Dang.
Oh my gosh.
Yeah.
I thought
Yeah.
I was overestimating saying 10 years ago. Lord. All right. We're going to come back and continue our discussion on when tech kills the deal with Aaron and with Dwight. Let's turn it over to Kristen Snow. She's a busy lady in the Right Now Traffic Center. Hello, my dear. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Let's get some phone numbers going, boys. Mr.
Yes, sir.
Beautiful, Mr. Clark.
So,
Thank you, fellas. All right, we've been talking about when tech kills the deal. We gave you some examples of the estimates. We gave you some examples on the lending side with Dwight on the automated underwriting, where a human being, i.e., Dwight, override that. Right? If anybody else would have had that deal and they was told their client, "Hey, you know what? System said no. Sorry, the deal's you can't do it." But That's why he is who he is. Guys, let's kind of wrap things up a little bit here with some, I'll kind of call them some rules. So let's start with the first one. Never rely solely on automated valuations. I love that point you made up, Aaron.
Yeah, the evaluations are a great opportunity to get a ballpark number when you're kind of trying to figure things out and maybe find out what, you're going to walk away with at the end. But the reality of it is you need to have somebody that can interpret the information and help you determine what the exact numbers are. And we're going to be way more accurate because there's so many other things that we take into account than just what did the homes across the street sell for that are similar to yours.
Do you see that changing in the next few years?
I mean, I think that as AI increases and we go more from algorithms to automated interpretation using AI, they're going to be a lot more accurate. And like Dwight was saying in the last segment, you probably will start to see less and less actual appraisals if people have a decent amount of equity in their homes, which is going to save them money and time.
Right. Why didn't you say, I don't know, last year or last couple of years, was it Fannie and Freddie are doing their own appraisals now?
Well,
Something along those lines?
there's multiple database sources out there, John, that you can choose from. And to Aaron's point, I'm not sure there's so much information out there why they don't give us, especially a house that has a lot of equity, why it doesn't give us a waiver. I don't know. I don't know if it's a liability. I don't understand it because it just isn't happening.
Oh, what happened to that program? Because I remember I was shocked. I'm like, oh God, the poor appraisers of the world. What are they going to do?
Well, I just don't think it was the success that they thought it was going to be. For whatever
really
reason,
around.
John, for whatever reason, you would think if you're going into a subdivision, and this is the 30th exact floor plan sold, you get a waiver, but you're not getting waivers.
Not doing it. Okay. I'm sure it's a liability. They want to point the fingers at somebody.
It's something, yeah.
All right, let's go with your next takeaway, Dwight, which is get fully underwritten, not just pre-qualified. Great point.
A human underwriter always has to sign off on a file. So you might as well get the taxes in, the W-2s, the pay stubs, the bank statements. You might as well get this thing fully signed off. You can get it without having a property. Aaron a lot of times gets his borrowers pre-qualified. Take them all the way through. It doesn't take you a whole lot longer than just the automated system. So, yeah.
All right, Aaron, back to you. Your next point. Have a professional review assumptions before submitting offers.
Yeah, I mean, the bottom line is you're going to rely on these outside resources to get pricing and determine when the perfect AI signal is to buy and wait for price drop alerts and do all these things where you don't have that human element that's going to help out. When we're helping somebody buy a property, we're communicating with the listing agent, we're finding out what's on the table. And you never know, like just because it says it's worth X, and even I agree with you that it's worth X, if we make a phone call and it's a special property and now they have 3 offers and they didn't before, we have to make adjustments if you want the house. That's the bottom line.
Absolutely. Again, folks, technology plus great expertise like Aaron and Dwight, that equals a successful real estate transaction and one that doesn't blow up. Everybody wins on that side of it. Great job, fellas. Great points. Again, please pick us up on YouTube, Spotify, KKOH.com, SanchezGaunt.com. We're out there everywhere. And of course, the podcast. Can't forget the podcast. Great job, boys. We'll do it again tomorrow on the Jon Sanchez Show. God bless. Have a great afternoon.
Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited and Equal Housing Lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited. Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.